Hey everyone, thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin and we're going to be looking at your return on investment or ROI from the date of the halving until the market cycle peak. So if you guys like this content, please subscribe to the channel and leave a comment down below. Also check out the Telegram channel in the description below if you'd like to discuss these charts among your own ideas with almost 1,900 other people that seem to be pretty active and really have great minds overall and a lot of good discussion. So let's go ahead and jump in. So we've talked about market cycle return from the bottom of the market, and historically the bottom of the market corresponds to a certain amount of time right before the halving, and then moving into the halving, the price is usually increasing and continues to increase on the macro scale, for 1 to 2 years after the halving. So you can see that if you look at the ROI from the first halving, so note that this is not from the market cycle bottom, it's just from the day the first halving occurred. You can see that we still almost saw a 100x, even though this did not correspond to the bottom of the market. You can see that we had a first peak that went up to around 20x from if you had bought the day of the halving back in late 2012. It came back down and then it ultimately went back up another order of magnitude, more or less, which is quite significant. And this was the first cycle after the first halving. And note that we are on a logarithmic scale, so 10 to the 0 is 1, which means it's your break-even point. So with this one, we basically just immediately popped above it, and had you bought the day of the halving, you would have essentially just been going up. And clearly, we would have retraced here, but even when we retraced, you were still 5 to 6 times up from your initial investment if you had made it on the date of the halving. So let's look at the second cycle. First, let's look at some just one other metric here. So one of the things we've talked about is, before we get to the all-time high, and then once we do get to the previous all-time high. So this line here just corresponds to the price of which Bitcoin was at its previous all-time high. So once Bitcoin saw about a 2.7 or whatever it might be ROI from the halving, it actually corresponded to the previous all-time high in the price. So just note that before we got to that point, we were below the previous all-time high from the cycle before, and after this line, the price was higher than its previous all-time high. So the second market cycle looks like this. So you can see that from the halving, we actually saw a drop in the short term. And it did drop fairly significantly. I mean, clearly in terms of Bitcoin, this is nothing. But I mean, if this is 1, then this is, say, 9.9, 0.8, a little more than 0.8. So we did drop around 20% or so in the short term, but ultimately recovered. And 100 days after the halving, we were back to break even. And then 300 days after the halving, we were at a 2x. 500 days after the halving, we were at a 10x. And then, 500 and some odd days, we were at a 30x. And again, this is from the halving, not the market cycle bottom, which would have even been lower. So if we were to draw a line that corresponded to the previous all-time high, which was around $1,100 or so. So once the ROI got up to this point, it actually corresponded to getting close to $1,100. So you can actually see we held that region as resistance, came back down, came back up, went above it, and then retraced again. And then once we got above it the final time, you can see how quickly we went parabolic over the next 200 days or so. And again, we saw incredible returns during this time. Now, one of the things we need to talk about here is, so we have the halving to peak. So the number of days from cycle 1, so halving to peak, was 372 days. So about a year, just 1 week more than a year. In cycle 2, it was 527 days. So we're talking more, obviously more likely a year and a half or so, maybe a little bit more, but essentially 18 months basically. And you can easily tell that not only did it take longer to peak, but the peak was significantly less than the previous cycle. So this again shows the evidence for the lengthening cycles. We would expect, obviously, if the trend were to continue, to not see a 30x from the halving. Now, currently the price of Bitcoin is more or less around $9,000. I think it's slightly below that right now, but it's more or less $9,000. And let's just round up and say say it's $10,000. If it's $10,000 and we were to see a 30x, then that would put us at $300,000. And clearly, I don't think we're going to get to 300,000. If we were 9,000x and we saw a 30 times increase, and that would put us at $270,000. So I don't think we're going to get there. I don't think that's in the cards this time. Some people will say, oh, we're going to go to 300,000 or we're going to go to 1,000,000, but it's just not likely. I mean, even if we saw returns from the first market cycle, from the halving, we still wouldn't get to 1,000,000 because you can see that the max ROI was less than 100, and we're not even at 10,000. Now, obviously, if the price of Bitcoin were to get to, say, 14,000 by the halving, then a 95x multiplier would obviously get us over $1,000,000. But for the time being, that's really not on the cards because I don't think we're going to see this type of growth. It becomes harder to get to move the market like that, and we're going to need to continue to see a ton of volume pour in, even to just get it up to, even say like 10x or something like that. So I'm not saying it can't happen, but this is another reason why I think that, Bitcoin getting around 6 figures or so is probably the target, just because I don't see us continuing to do anything like what we did in the previous cycles. So let's keep pressing forward. So if you notice, the ratio between these 2 points is 1.4167. Hopefully I typed those days in correctly because I didn't actually double check. And there's an issue with only taking 2 data points, is because you can't identify a trend in in the engineering world or in any technical world with only 2 data points. It's just not possible because you don't know the nature of growth. I mean, it's impossible to really take too much away from this, but it's all we have to work with. So let's just take this ratio and multiply it again with 527, and it would put, say, cycle 3 at occurring 747 days, assuming the same ratio after the halving. So that would occur somewhere out here. And if we were to say, just draw a circle at a 10x return, and then put, some level of error on that, because clearly we don't know exactly where it would be, and then also draw a potential outcome. Clearly the only thing I can guarantee you is that the price will not do this, because I just random drew a squiggle on my screen in about 2 seconds, going up to a new paradigm shift in the market before it likely comes crashing back down. But you can see this trend as we push forward. And if we were to, say, take 747 days from the market cycle bottom, then it would put us peaking on June 4th of 2022. Now, I think what's more likely is that this ratio is going to get larger and larger. I don't think it's going to get shorter, and I don't think it's going to stay the same. So for that reason, I think it's likely going to be further out here. And so I also put on a tolerance here, because no one really knows when it's going to happen. No one really knows what price it's going to go to. But what we can do is try to take our best guesses, and whatever does happen, just be prepared for it. Whether Bitcoin goes to 50,000 or whether it goes to 150,000, the idea is to be taking profits on the way up, potentially dynamically, which is I've talked about a lot before. This is obviously not financial advice. This is just how I do it. And there are people that are also choosing to do it this way. They're preparing now, because if you don't make a plan and you just say, okay, I'll figure it out later, then what's going to happen is, the price of Bitcoin at some point will likely go up, and you're going to get greedy. You're not going to sell. You're probably going to see it dip or something 30 to 40%, which it can easily do even during a bull market. And then you're going to get scared and sell, your entire stack, and then the market's going to start moving up again, and then you're going to buy back in, having lost 20% of what you had accumulated for the entire bear market. So, all that hard work you put in to say, average in a few $100s every month or something, a lot of people are going to likely lose that on the way up because they're going to try to day trade. And, people during these times like to say, oh, that's not going to happen. But I tell you, greed is a nasty thing, and a lot of people are going to get swept away by it. So that's why I created that risk metric that I publish on my YouTube channel every couple months. And if you want, updates every 2 or 3 days, I do publish that on Patreon. So check that out if you want to be a part of that. I know I do talk about that a lot, but we do have a growing community there of almost 100 people. So I think people do like it, and we have a private Telegram group that you can check out too. So if you want to check that out, it's just patreon.com/into-the-cryptoverse, and we can go from there. But anyways, we have this time band on here, so more or less, I think it's likely to occur later 2022. So maybe somewhere over here, and I think it could go, even into 2023. I mean, even 2024 isn't necessarily off the cards, but I think the probability of 2024 is much lower. I really think that we would, if we're gonna see this parabolic move, we would likely see it in 2022, even 2023 time frame, which will be around 6 years since the last all-time high. And if this is the case, if we are seeing lengthening cycles, and some of you are probably upset that this could be the case, well, my advice to you would be, if we are in lengthening cycles, think about all your family and friends that aren't even invested in the space yet. They're probably going to see Bitcoin get to 100,000, and then they're gonna FOMO into the market, and then probably lose a lot of money because they're going to be the dumb money rolling in, and you're going to be the smart money selling out at that point. And a lot of those people are going to capitulate and not look at crypto, for years. Some people will hold through the bear market, and they'll have to, in order to see a new, paradigm moment with Bitcoin, they would likely have to wait maybe out until 2030 or even later to see another peak, if the idea of lengthening cycles is correct. Now, while we say that 4-year cycles, while I think it's unlikely, I genuinely hope that is the case, because I would much rather profit sooner rather than having to wait until 2023. Because if we have to wait until 2023, then we would already be halfway on to the next cycle, if it were a 4-year cycle. Because if 2021 is the next peak, then 4 years later we would be in 2025 to see another peak. Obviously, that would be preferable. I don't think it works that way. So consider that waiting 2 to 3 years from this point isn't really that bad, considering that the next cycle, it might be 7 years or 8 years. So look at it like that, and I would say treat this as a potential opportunity of a lifetime, because you're getting the chance to accumulate Bitcoin and other coins, whatever it might be, at levels that are still, I think they're still reasonable, and assuming, barring any type of catastrophic recession or something, the math supports us to continue to see these speculative bubbles with blow off tops, followed by brutal bear markets. So I do want to also show, this is if we continue from the peak until the next halving, this is what it looks like. So the first cycle came to this peak, and then saw a nasty bear market, and then ultimately came back up right before the second halving. Second cycle, peak, bottom, and then this is where we currently are. So you can see that even after this brutal bear market, we're still, even at today's prices, we're still, 10x up or so from where we were at the last halving, which is pretty incredible. So one idea I wanted to discuss is with regards to the halving, and that I think a lot of people have a hard time wrapping their head around is, well, they'll say, well, Ben, if lengthening cycles, if that's true, then how does the halving affect that? Because if the idea is that we're gonna peak in, say, 2023, let's say the next peak is in 2023, and then we have a brutal bear market that goes into 2024, then that would also correspond to having, say, another halving while we're in a bear market. So not while we're in, say, an accumulation phase, or not after we've gone down and then we've come back up, or here we went down, had an accumulation phase, came back up into the halving. What if, the price of Bitcoin is just going down and then we have the halving? How does that affect things? Well, I think each successive halving is going to have less and less of a role in what Bitcoin's doing. And if you're not familiar with the halving, it's just the amount of Bitcoin mined per block gets reduced by half. So the idea is that the sell pressure from the miners will go down because they're not mining as much Bitcoin. And in an ideal world, with the same, if supply goes down and demand stays constant, then the price must go up. That's the general idea. So, but the point is Bitcoin is not always going to be as volatile as it is today. You can already see that it's reduced in volatility over the last decade. We've shown annualized volatility over the last 10 years, and we can see that it's decreasing fairly systematically. And ultimately, we would expect its annual volatility to get fairly low. And I've shown in prior videos that I think that by the year, 2040, plus or minus a couple years, by that point, the annual volatility of Bitcoin is probably going to be less than 10%. And I just think that's the way it's going to be, because by that point, if it continues doing what it's trying to do, I mean, most of the world is likely going to have some Bitcoin, whether it's just a few sats or not. They're going to have, a lot of people are going to have some, at least in developed countries. So the reason why, I think is going to contribute to that reduced volatility is the fact that during the bear market, the next halving in 2024 will help curb that level of retracement. So basically, it's not going to push it into another bull run, but it's going to help reduce volatility, because people, while we're going to be in a bear market, if the lengthening cycle theory is true and we peak in 2022, 2023, it's not going to lead into a bull market immediately, but it would help reduce the sell pressure. It would help bring some confidence back to the market, and maybe then we would enter an accumulation phase, and then let's say we move forward to say 20. So the halving would be in 2024. So then you could imagine maybe a couple years of accumulation to 2026, and then maybe we start picking up in 2027 and 2028, and then the next halving in 2028 would then lead to the next blow off top, which might only be a 4 to 5x from the previous halving or something like that. Now, there's a lot of ifs, obviously, in that statement. We don't know yet. We have not proven that it's not a 4-year cycle. We have not proven that it's lengthening cycles. This is just what I think is going to happen. But I know that I am somewhat biased in what I think, and I basically just, essentially I just try to let the math do the talking, and not try to come up with just any random opinion based on how I feel that day, but just say, okay, let's look at this. It looks like the cycles are getting longer. It's natural to assume that the next cycle will take longer. Drawing the next cycle peak, going up to 30x in 18 months, like the last cycle, does not seem to match with this trend. And if it were to do something like that, then that means that this one is an outlier and that this is somehow the normal. And this was just something ridiculous that happened, never to be repeated again. And I think the more likely scenario is that the time is going to take longer, and the ROI is going to decrease. So I hope this has been useful to people. Again, this sort of final touch I put on the video in terms of think about these longer cycles and how the halvings could affect future volatility. I mean, essentially, it's just a thought exercise. You're more than welcome to disagree or agree with me. Please let me know what you think about this in the comment section below. I'm all ears. If you want people to really engage with you and your ideas about this, then really check out the Telegram channel. And we have a lot of people in there that would be happy to discuss whatever your idea might be, and whether you agree with lengthening cycles or whether you think that it's a 4-year cycle. And if you think it is a 4-year cycle, I would like to know what your evidence is for that. Is your evidence just to say that the peak that we saw in the early 2000s, and then the peak we saw in early the 2010s, and then the peak we saw in 2013, were those supposedly part of the same cycle, even though we saw an 85% reduction in Bitcoin's price after the first blow off top? Is that your argument? And if it is, why do you think that just because, and if it's not your argument, why do you think that just because the 2013 to 2017 cycle was 4 years, why do you think the next one has to be 4 years? Because I think a lot of people think that, well, since the halving is approximately every 4 years, then the market cycle has to be somehow ordered exactly around the halving. And I just don't think there's any evidence for that. And the only way to get evidence for that would be to say, have the next cycle be 4 years. If the next cycle is 4 years, then I'll buy it. Until then, I'm not buying it. So again, if you guys like the content, at least subscribe to the channel and check out Telegram. If you want more info like this, want to request charts, I will say that a lot of the videos you guys see, some of them are special requests from some of our Telegram members. So if there's really something, and I should say Telegram members in the private group, so the ones that are supporting the channel on Patreon, whether they're paying in fiat or crypto, those are the people that if they have an idea, they can say it, and I'm more likely to be like, okay, I'll look into that. For instance, the video I made like a couple videos ago showed altcoin running ROI 30-day, 60-day, 90-day, 180-day, 1 year, and 2 year for 24 different cryptocurrencies. One guy in the group asked if I could do this for a few cryptocurrencies, and I just said, oh, well, what the heck, I'll do it for 24. So if there's something you're dying to see, just support the channel. I'm trying to grow this into a larger thing so that I can spend more time doing it, because this is not my full-time job. So feel free to check that out, and I'll be happy to talk with you guys, even in the public channel if you want to join that. So again, subscribe, like the video, leave your comment below, and I will talk to you guys next time. Bye.